welcome to Bhank FX, your number one channel for logical trading. Do you know you're already a part of the financial market? Have you shopped on Shein, Temu, or AliExpress? Have you paid your fees in another country? Have you sent money abroad? Have you buy a phone or jewelry from another country? Do you import and export goods from one country to the another for profit? If you answered yes to any of these questions, you are already engaging in the financial market, knowingly or unknowingly. In this video, I'll show you step by step how the markets actually work and how you can start trading profitably. I'll give you the complete step-by-step blueprint to go from zero to placing your first demo trade, covering the essential concepts like accounts, leverage, and reading the charts. Before we start, tell me in the comment section, have you ever sent money abroad or buy anything online? I want to know your story. Alright then, let's begin with the simplest question. What is market? Well, the layman explanation or the layman definition of a market is going to be a place where buyers and sellers meet to exchange goods and services for money. So it is a market or a marketplace. It's a place where buyers and sellers meet to exchange goods and services, at times information, for money. And it can be done through, or even better trade, it can be done through a physical place, like for instance Tesco's or maybe Walmart, or a physical place where you go and buy something from. And it can be an online shop like, let's say, Amazon, like Shein, as I earlier mentioned, or even AliExpress. These are all types of marketplaces, especially they are categorized under the traditional marketplace. So again, if you talk about a market is a place where buyers and sellers exchange goods and services, sometimes information, for money. And it can be in a physical location like Tesco's, Aldi, Walmart, American Express. It can be all these. It can even be your local McDonald's joints. They are all market. And we have the online as well, the online version like an Amazon marketplace, an AliExpress, Shein, Temu. They are all marketplace, and they are all places where buyers and sellers meet to engage. Now, let's zoom in into our side of things, the financial market. The financial market is also an online market, but with this online market, what we buy and sell there, they are not goods and services. We buy and sell money to make profit. So it's like you are buying money, and then you are making profit on that money. That is what we do in the financial market. And in the stock market, what we are doing is that we buy shares on commodities on companies and other big entities or corporations. We buy their shares so that when the company increases in value, we also would benefit from the investment that we have made. So in the financial market, we have different kinds of market or different kinds of assets that are being traded there. So we have the FS or the Forex market. So in the Forex market, all that goes on in there is the exchange of, it's currency based. Everything there is concerning money. So we have our euro, we have our dollar, we have our pounds, the GBP, we have the New Zealand dollar, the NZ, that's the New Zealand dollar, NZD, We have the Australian dollar, which is the AUD. So this is a marketplace where we trade currency for currency. So let me explain it a bit. Let's say that you are in UK here, which is in let's say GBP, because UK we spend or we use pounds, so pounds, and then you have a holiday that you want to go and spend in or you have booked your holiday in, let's say, a country like, let's say, New Zealand. So when you get to New Zealand, or you are going to New Zealand, you are going to exchange, or you are going to change your currency from pounds, from the pound sterling to the New Zealand dollar. The place or the marketplace where we determine the prices for the exchange rate of the pounds into the New Zealand is what we are learning right now. That is the financial market, or that is the forex market. Okay, so the forex market is the market that deals solely with what? Money from one country to the other. For instance, if somebody is in Nigeria and wants to buy something in America, the Nigerian guy has to change his naira to dollars. The marketplace that determines how much naira is the Nigerian guy going to use to buy the thing in dollars, that is where we are learning about right now. So we have the forex market, we have the, let me clean this up so that it doesn't look so messy. Sorry guys, yeah, 1 minute. So we have the forex, which is in short we call it the FS, and then we have the stocks, the stock market. So we have the stock market where we trade shares of companies like Amazon, Apple, we have Google, all the big Coca-Cola, all the big companies that are around, they are named on the stock exchange where we trade the shares of the company. So if you go to the bank and then you say that, okay, I want to deposit money and to buy the shares of this company, the bank send it to the financial market here so that they can go and trade it on the exchange for you. So we have forex, we have stocks, we have bonds, we have crypto. So I believe most of you have heard of crypto. So we have so many different crypto currencies that are going on circulating right now. Can mention a few like Bitcoin, we have Ethereum, we have meme coins, we have so many Avalanche. We have so many cryptocurrency coins that are going on, or cryptocurrencies that are circulating, and they are all part of the financial market. So I'll make a separate video talking about all of this into much detail for you to get the real detail of what is traded there and what's going on there. Today we are just going through step-by-step process, trying to understand everything that is going on so that we know how to position ourselves. And then so let's zoom into this now. When we take the forex trading, forex market for instance, let's zoom more into it because that's what our channel mostly is for, the forex market. So when we talk about the forex market, in a day, the amount of transaction that goes on in the forex market is around $7.2 trillion. Yeah, you heard it right. It's not billion, it's $1 trillion a day. $7.2 trillion of money or deals or transactions are being transacted alone in the forex market. So every 24 hours, total volume that goes through the forex market or the forex industry or the currency industry in the whole wide world is what? $7.2 trillion. So it is not a small market, it is the biggest market in the whole wide world. and they are responsible for making so many of the decisions that goes on in the world. Because imagine $7.2 trillion floating in and out. Definitely they control the world. Exactly. This is the reason why we need to learn and understand what really goes on inside this market, so that we can position ourselves well and make some money off the 7.2 trillion dollars that goes on every day. And that is why we are here. Okay, so now you might ask that who are the participants, or who are the people that are involved in the forex market? Well, let's talk about the participants of the forex market. So the participants of FS market. So I'll first of all talk about one, the central banks. Yes, the central banks. Who are the central banks? The central banks are the banks of each country. For instance, in the UK, we have the Bank of England, Scotland, Wales, or if you go to countries in Africa, like Ghana, we have the Bank of Ghana. So Bank of Ghana. We have Bank of Nigeria, we have Bank of Ecuador, Bank of US. All the central banks of each country do business here in this same marketplace. And then we have so basically each country, their main bank trades in the financial market. Why? Because they are responsible for all the monies that comes in and out. For instance, if you are traveling to Ghana and you have to change your currency to cedis, every transaction going on in Ghana has to pass through the central banks. So they will determine the value of their cedi to the dollar or anything. So all these banks, they do trade, or they are participant of the forex market. Now, number two, we have the commercial banks. The commercial banks in each country is also participant of the forex industry. What are the commercial banks? The commercial banks are the biggest banks in each country. They are just slightly lower than the commercial banks. They deals with every activity going on inside the country. So if somebody has dollars in the country and wants to change it to any other country any currency in the country, they are responsible for that. So when you go to, let's say, your local bank responds to what your commercial bank, and then your rural banks or your district banks, all these banks responds to the commercial bank, and the commercial bank responds to what? The central banks. So all these are all participants of what? The forex industry. So the number three on the list, that are the people that would invest or do business in the forex industry, is number three. We have the hedge funds, or the hedge fund stroke institutional investors. So who are the hedge funds and the institutional hedge? These guys are the guys that trades our pensions. So if you are working and you are being deducted money that when you go on pension we are going to pay you after your service, these guys are the guys that deals with that. Your insurances, your all these kind of monies, the taxes, that everything that they collect from us, these hedge funds and investors, that is where they do go and trade it. So they are all trading in the financial market with our pensions, with our deductions that they deduct from our salaries and everything. These guys trade them there in the financial market. So therefore then we move on to the next participant of the FS market, and then we have the money transfers. So the money transfers guys like Western Union, we have tap send, we have Remitly, we have Lemfi, we have all these mobile money transfers, or all these transfers that happens in different countries, sending money from one country to the another. All these guys do trade in the financial market, specifically the Forex market. They have impact there. So you see, wherever that you pass, whether you are just working or whether you are just sending money somewhere, everything goes through the financial market. This is why I said in the beginning of the video, you are already a participant of the financial market and you don't even know. This is why this video or this course is very important, so that you get informed of what is actually going on, where your monies are and all that. Now the fifth people that really also is part of this is all the corporations. We call them the corporations and what have you. For instance, let's say Nike, Coca-Cola, Amazon and all these guys. Why are they trading in there? Because if Nike is in US and they have to come to the UK to sell, they need to change the money of dollars into what? Pounds, to be able to do business in the UK. So if Coca-Cola, wherever they produce it, they have to change the money in there. So all these corporations also have to trade in the financial market. Now, the C's guys here that also are in here is, yes, number 6 is what? The retail traders. Yes, you and I, the retail traders. Who are the retail traders? The retail traders are the guys that speculate on price, whether prices are going to go up or they are going to go down, and make profit out of it. Yes, we are also part of what? The financial market. We form the lowest percentage among all the other participants of the financial market. So that's for the participant of the financial market. You might ask, is there a location where this market is that I can go there physically to trade or something? Yes, there we have location for this market. We have locations like the New York Stock Exchange, New York Stock Exchange, and then we have the London Stock Exchange, we have Frankfurt. Yeah, we have Frankfurt. Then we have Asia. So Asia, the Asia market comprises of what? We have Sydney, we have Tokyo. So all these are centers or locations that you can physically go there to go and trade. But my question to you is that $7.2 trillion are being traded every day. So imagine the capital that you will need to be able to get access into these areas, to even have a desk there to go and trade. Do you see it? You need to have a huge amount of money or a huge capital to be able to trade inside the Forex market. So somebody might ask, then how are we trading there, or how are you even trading there? Then this leads to my next subtopic that we are going to cover, which is what? The brokers. The brokers. Who are the brokers? Who are the brokers, you might ask? So you ask, who are the brokers? and what is the job of the brokers. Now, the brokers, since we cannot get into the financial market ourselves because we don't have our capital is not up to the requirement for us to go onto the stock exchange itself, let's say the New York Stock Exchange itself. It is these guys, these brokers, that serves as an intermediary or a middleman that goes onto the. So let me explain it this way. This is K here, Mr. K, who wants to trade, right? Now, Mr. K's money is not enough to go into the New York Stock Exchange. So what does he have to do? He needs someone to help him out get into the stock exchange to be able to trade or send his orders in there. So the person that will receive, let's say it's like the delivery guy that receives or delivers your parcel to you. Those brokers, they are the link between retail traders and the stock exchange market. So they receive our orders here and they execute those orders on the stock exchange for us. So they have a certain level of capital where, for instance, if they have 5 customers here and everybody brings in their orders, let's say 5 customers, they all pass through the broker so that it become one bulk money or one bulk order, and then the brokers rather send it to the stock exchange so that their orders or the trades that they have taken can be executed on the stock exchange. So one of the works or the most important thing that you have to do as a new beginner trader is to understand that you cannot trade the financial market without a broker. You need a broker because you don't have enough capital to get into the stock exchange itself or the exchange itself because you don't have enough capital. So now, aside that, the brokers, the other things that the brokers do is that they offer us platforms on which we can see the live prices that are happening or going on onto the chart. So some of these trading platforms are the Meta Trader 4, and then we have the same Meta Trader 5, which I'm going to show you the interface now. We have C Trader, we have Trading View, and there are so many of them. There are so many. It depends on what you want, but I recommend starting with the MT5. It has minimal interface where it's easier to get around. So when you go onto when you start, you have to first of all find a broker, and after you find a broker, then the broker will give you options on their platform which they offer for you to be able to trade, and that is either going to be an MT4 or an MT5, a C Trader, Trade Station, TradeVate. There are so many other platforms that they are going to, and all of them varies from beginner level to advanced level. So as a beginner, I would advise that you start with either MT4 or MT5, then you work your way as you find your feet in the trading space. So either of these 2 platforms will help you to get started. Now, the brokers, we have something that they call spread, and the spread is the commission that these brokers charges whenever they execute or they work for you. So it's just like paying delivery fee for your delivery, or when you order a food and the delivery guy is coming in, you have to pay the delivery guy, right? It's the same thing. When you send your orders onto the market to trade, whether it is buying a buy order or a sell order, when it gets to these brokers, they charge you a spread, which is a commission, before they execute your trade for you. So for instance, if prices are around $10 here, that is the general price, right? But depending on the broker that you are using, the broker might decide to charge you, let's say, £1 extra plus what, £1 extra before he sell it to you. So instead of you paying $10 for the actual price, of the stock or the currency or whatever that you want to trade, they will charge you a commission, and that commission is what we call what, a spread. See, it's what we call a spread. So let me quickly show. Yeah. Now, good. Stick. We are almost done. So from the spread, we are going to something we call what, leverage. So when you are creating your demo account, your broker will ask you the capital you want to start. So assuming you want to start with $20,000, right? After you have selected, let's say, $20,000, you will see a column where they will be asking you for leverage. Now you see 1:20, 1:30. It goes all the way up to 1:500, depending. There are some brokers that even offer 1:1000, depending on the broker that you choose to register with or to start your journey with. Now, I'll do a separate video on leverage, the logical understanding of leverage, so watch out for that video. But let me quickly talk about leverage here. So what is leverage? Leverage is the amount of money your broker loans you plus your capital to be able to get more buying power or more selling power to do your transaction. What does that mean? So assuming you open your account and it is $20,000, so 20,000 here, and then you select 1:30 or 1:20 or 1:500. What you are telling your broker is, okay, I am Mr. K and I have 20,000 in my account. If I select 1:20, I am telling my broker that, okay, broker, lend me times 20 of this amount of money. So for instance, if you choose let's say 1:20, you are saying that your broker should multiply your account 20 times, and the resultant figure is the purchasing power or the transaction power that you have to be able to do business. So it has a good side and the bad side. So if the higher the leverage you choose, the higher buying power or transaction power that you have, and the lower the leverage you choose, the lower buying power, selling power that you have. But the caveat of it is that when your investment is going against you, they will first of all deduct the money from your capital first, before, when your capital is exhausted, then they close your account. That is what most say, that I have blown my account. They will give you the loan, they will multiply the loan for you here 20, but then when you use that loan to do business and it's going against you, they will deduct it from your account, not their loan money. So the good side of it is that you have more purchasing power and you can enjoy more profit, bigger profit. But when it's going against you, it's going straight directly into your account. Does that make sense? So if, let's say, your account is 20,000 and then you choose 1:1000, so you multiply 20,000 by what? By 1,000. So let's just add extra 3 zeros here. So although inside your account you have 20,000, but you have the buying power of $20 million. Do you get it? So if you enter any position with this with this leverage, this is the resultant, or this is the purchasing power that you have. So if you enter a position according to the 20 million, and let's say that you are in drawdown or it is going against you for $10,000, that $10,000 do not come out from the 20 million, but rather it will come out from your 20,000. So immediately your account will be 10,000, or your capital will be 10,000. Your capital will be 10,000, not 10,000. Not, let's say they will subtract this from the 20 million. No, they will subtract it from your account first. But if you are in profit, it comes straight on top of your 20,000. So that's the other side of leverage, and the good and the bad side of leverage. I'll take time off and I'll go into details, the spirit behind it, the logical understanding of leverage and everything for you to really understand it. But now I just don't want us to waste more time and deviate from our main objective of the day. So after you have opened your broker account and everything, your broker will give you the platform. So now let's go into the platform to see what goes on there, or what you are going to get. So in this case, we are now going on to the charts. I'm going to share my screen, the screen of my chart, so that we will be able to see how it feels like and how it is like. So voila. Now after you've opened your account, you get a platform like this. So in this case and in this example, the platform I'm using for this example is TradingView. So I'm using TradingView for this example as my platform that I'm using to monitor prices. So whether you are using MT4, you are using MT5, you are using you are using CTrader, they all have similar or the same characteristics, basic characteristics. So always the numbers you are seeing at here on this right side here is always going to be the current price of the instrument that, or the asset that you are looking at. You're looking at it charts. So the right here, the numbers that you are going to see there is what the current price. So for now, and here you see the name of the instrument that you are looking at. In this case, it is gold spot versus the US dollars. So this is the gold against the US dollar chart. And then FSCM is my broker that I'm using. So this FSCM is giving me the ability to have this chart and these prices, to see the current prices of gold, for me to be able to read it to determine whether it is going up or it is coming down. Saving close. So all this that you are seeing here, they are all charts of different currency pairs. They are all charts. Now let's go into the deeper side of the chart so that we learn more about the charts. I'm just trying to use, so yeah, this is a clean chart with no anything here. So, and we have already known that here, around here, is what the prices of the commodity or the asset or the currency pair that you are looking at. Down here is the dates, and the green and red things that you are seeing here is what we call the candlesticks. The candlesticks. So what do the candle, so the candlestick is another form or a type of chart that will track prices. So we have different types of charts. So we have the candlestick. Let me see if, yeah, we have the candlestick which looks like this. We have the line chart that looks like this. You see, we have the area that looks like this. We have a line chart with breaks that also look like this. So depending on the kind of chart that you want, we have the different kinds of charts, but the mostly and widely used one is the candlesticks chart. So if you look at this interface here, on this top here, you see that XAUUSD. So the XAUUSD is the symbol for gold, XAU, then we have the USD. So this is the symbol. So this is currently, when I'm looking at this right now, what it's telling me is that I am currently looking at the gold chart and what the prices are currently doing right now. Now, as from there, you see there are certain numbers here. These are what we term as the time frame. So we have times that each time that you want to zoom in to see what price is actually doing. So we have the 1 minute. This is how the 1 minute looks like. So each candle that will form here takes 1 minute for it to finish forming. So let me zoom in for you to see something here. So you see that this is the current candle forming right now. It will take 1 minute. So when it's 1 minute, this candle will stop forming and a new one will start forming. Now, if the candle is red, that means that prices started from this top here and it came down. And if the candle is green candle, it means that prices started below here and it went all the way up. So a green candle means just like what is forming right now. You realize that the chart started from here, it ended here, and now prices are moving up. That is why it is printing a green candle. So if prices right now closes, and mind you again, we're on the 1 minute chart and each candle takes 1 minute to finish forming. So if it finished forming and the price close on this candle upward, then it means that it's going to stay as green candle. So this is the chart that you are going to come to when you finish registering with your broker. So now the movement, when you saw that the last time that prices was down here, now it's moving all the way up. If you see this line is what is determining the current price. The movement that the prices is doing right now, you see the up and down movement that is doing, is what we term in the market as what? Pips. Yeah, pips. So anytime the steps that prices takes, whether it's taking up or whether it's coming down, is measured in pips. The minute changes that happens in price, it is measured in what? Pips. Guys, this has been a long video, and this is the end of the complete guide to the trading journey course. Thank you.